Well, welcome everybody to this virtual extraordinary meeting of the Audit Committee. My name is Councillor Peter Marriott and I am the chairman of this committee. I'm supported this evening, I think I've got this right, Graham Clark, Strategic Director, Mr. Peter Vickers, Head of Finance Property, Rosie Plesto, Fiona Cameron, and Kimberly Sohn. Is that correct, Kimberly?
We also have Victoria Baisley.
Is Victoria here as well? Okay, thank you.
And then we also have John Roberts and Mark Bartlett.
I was going to say, yes, a special welcome to John Roberts and Mark Bartlett from Grant Thornton, our auditors. Go through the usual preamble about using Zoom. Please use the hand raise function within Zoom to indicate that you wish to speak. Please keep yourself on mute when you are not speaking, and please can I also ask that any questions are kept brief and to the point. If any member in the meeting loses their connection temporarily, we will pause to allow them time to rejoin the meeting. And if the webcast stream fails, then we will also have to adjourn till we're able to reset the connection. Okay, thank you very much for that. We'll go straight on to the agenda. Firstly, we've done apologies for absence. Thank you, Kimberly. So that was item one. Now, perhaps I should start up on just saying item one is just the purpose of this meeting, and that's to receive an updated audit findings report and the 2019-20 accounts from our auditors. There was some significant change, I think, from the previous meeting we had when the accounts were presented, which required a separate meeting and probably too much to deal with under delegation. Item two is the apologies for absence that we've received already. Item three is disclosure of interest. Were there any disclosures submitted, Kimberly?
Non-submitted, Chairman.
Yeah. Members of the public, that's item four, any submitted?
No questions. No.
And questions from members? Any submitted?
Non-submitted, Chairman.
Thank you. So I think we'll go straight on then to item 6, which is one of the two items we have for this meeting to consider. The updated audit findings report, which is on page 1 to 34 of the agenda pack. So can I hand over to Graham to take us through this, please?
Thank you, Chairman. Chairman, I won't be taking you through the audit findings report. I'll hand over to Mark and John to do that. But maybe I could just expand on your introduction, if I may, Chairman. So this meeting has been called because I didn't feel that we would be able to approve under the delegation that the September Audit Committee meeting gave to you in conjunction with yourself, Chairman, the ability to sign off the final audit findings report, because over the last couple of weeks, or a few weeks, we've been working with Grant Thornton and a few matters have come to light that no doubt Mark and John will take you through in a minute. They are the highlighted red text in the audit findings report. So I didn't feel that we could deal with that under delegation. So I asked Kimberly to set a new meeting up so that we could go through those points. What I would say, Chairman, is that this meeting is to look at those changes. It's an update meeting. I'm sure members won't want to go through all of the aspects that haven't changed, because at the last meeting the committee was satisfied with those. I'm just looking at the minutes of the September meeting, Chairman, and the committee agreed to a delegation. I've already dealt with that, but this is to so the committee resolved to approve the statement of accounts for the financial year 31st of March 2020. The revised version in the light of the proposed changes is on the agenda tonight, and all of the changes are set out in Grant Thornton's report. The second aspect that the Audit Committee agreed last time was to approve the letter of representation for 2019-2020. That letter of representation doesn't need to change. I spoke to Mark before the meeting. What we do need to do is just minutes that we will update the date on that letter, and I will issue that letter following this meeting, Chairman, but there's nothing for the committee to decide tonight on that because it hasn't changed since September. And the final one was confirmed that the accounts have been prepared on an on a going concern basis, that position hasn't changed either. The final thing I'd just say is about annual governance statement. Chairman, the committee approved the annual governance statement at its September meeting, but because that sits alongside the accounts when we publish it, we will just need to update the date on that. There's nothing in the annual audit letter that requires a change to what was previously agreed by the committee. Chairman, if it's okay with you, I will hand over, I don't know if it's Mark or John that's going to be leading on this, but if I can hand over to Grant Thornton for this item, please. Thank you, Chairman.
Yes, thank you, Grant.
Okay, thank you, members. And I will just introduce the updated document, and Mark will take you through a couple of the main points that have resulted in the need for this meeting and the amendments in red. Build on what Graham has said, we don't think this is appropriate to rehearse the whole document. We've been very clear in the document what has changed and what remains the same from our views at the last time we presented to committee. And the key thing for members' benefit is that our proposed opinions don't change. Our proposed opinions still remain unqualified. Since the last time we spoke to you formally, I've also talked to you about the developments in local audit, and in one of those areas was the valuation of property, plant and equipment and the quality agenda around that, which is why auditors spend a lot of time focusing on this area. And as Mark will explain now, the key findings that have a bearing on the reported numbers in the council's accounts are relating to the property valuations. It's a requirement of the CIPFA code. It's important we get those right, but they are non-cash valuations, if you like. So there is a little bit more reassurance, I think, around that to members in terms of whilst there's impact on the income and expenditure statements, it's not linked to the actual cash reserves of the council. So if I can hand over to Mark, he can talk you through.
Okay, thanks, John. Thank you, Chair. Right, so as John said, I'm not going to take you through parts of the report that you've already considered at the previous meeting. We've put in red all of the wording that has changed, so that's hopefully drawn your attention to the key aspects that have changed. So I guess it's worth just picking up. I mean, John mentioned in terms of changes to the consolidated income and expenditure accounts. So on page 3 of our report, it's also page 3 of your papers, I think, that sets out that the actual adjustment to the CIS statement is 9.5 million. But that, as John said, is driven by the changes that have been made to property, plant and equipment revaluations. So while it does impact on the CIS statement, it doesn't actually impact on actual cash. So we've now got everything substantially complete. As I said, we've got just the final bits that we'll need from you. You may recall I mentioned in the previous meeting that we'd be including an emphasis of matter paragraph within our audit opinion, and that was in relation to the material uncertainty over land and buildings due to COVID. We're just adding an additional reference within there, which matches an additional statement within your amended financial statements around the material uncertainty over the council's share of pooled property investments within Surrey Pension Fund. Again, that is very much consistent with what we've seen at other local authorities. Just going over onto page 5, the other just bit to draw to your attention in terms of our conclusions. John said while there's no change to our opinion at all, it's just worth highlighting that the target date for publication of audited accounts is today, the 30th of November. So as we're not going to be in a position to actually issue the opinion today, as there's not enough hours in the day to finish it off, that's meant that the council's needed to publish a statement just confirming that the audit has not been concluded at this date, but will be concluded soon in December. And we are actually intending to sign off tomorrow, subject to receipt of all the necessary signed papers. So just moving to a couple of areas that were outstanding at the time of the previous meeting. So page 7 of the report, our work on journals was still in progress. So pleased to report that we didn't identify any issues in relation to override management controls from our work on journals. So just worth highlighting that. And then really, I guess, to like the main areas of change. So page 8, you can see there's a lot of red in there. At the time of the last meeting, there was a lot of work still in progress in relation to our work on property, plant, equipment revaluations. We've set out there now our findings now that the work is concluded. And what's changed there, we had talked about the indexation to council dwellings before, but the other main change that resulted in a material amendment to the accounts was in relation to the valuation of leisure centres. So there had been an adjustment to the basis of valuation for the leisure centres in the draft financial statements. We challenged some of the judgments that have been made as part of that valuation process, which, as John said, that it's currently very much an area that the FRC is expecting auditors to do. That's resulted in a material adjustment to the accounts to change the useful economic lives of those assets. So that and the indexation change are the two most significant changes to the accounts from the original ones that you saw previously.
Mark, can I interrupt? Sorry, can I ask a question on that, the valuation?
Of course, yes.
Particularly the leisure centres. What is the basis of the valuation? It's just a building, but with a specific purpose. So what are the measures, if you like, or the rationale for valuing it?
What had changed so within the draft financial statements, so that the key drivers are the overall asset life for its entirety, and the remaining useful economic life, and then you've got like the cost of rebuild, I guess. So those factors are judged against the cost of rebuild. The useful economic lives had changed quite substantially from what had been used previously, and that was driving the change in their value. We queried that, and that's been reassessed by management and the valuation team, and that's resulted in an updated valuation that the management are now happy with, and we're content that is now correctly supported.
But as a business, presumably it has a value because it is running as a business, and I guess only that type of business. So does it have a commercial value which is different to what you've valued it at? Is that a relevant question?
It's probably not one that I can answer in terms of an alternative value. I don't know if that's one that Peter might want to jump in on.
Well, leave that one for now. I mean, it's really a question of how you come to evaluation.
Okay, I think I've got it off mute if you can hear me. Yeah, can you hear me?
Yes, we can.
Good. Thank you. That's a reaction. So sorry, the question was about remind me.
The question of the valuation is basically based on the lifetime of the building itself, what's left in that. And what was the other feature you said, Mark? The rebuilding cost, but presumably it contains no element of the business as a value, the fact this commercial.
I recall.
Building.
So the valuation is a valuation that is particular to local authority statutory accounts. It's depreciated replacement cost on the basis that, as you say, it's not valued as a going concern business. So if we were to sell it to the private sector, we'd take a different valuation to DRC. but for our accounts, it's depreciated replacement cost.
Okay, thank you.
Okay, thanks, Peter. And so I think the other bullet points there, I wasn't going to go through each of those in detail. I suppose the only one to highlight that links to a new recommendation within the audit findings report is where we've looked at the supporting evidence around assets that haven't been revalued in the year, and how management gain assurance that there's not a material difference between the carrying value in the accounts and the fair value at the balance sheet date. And management has set out their process and logic for how they gain that assurance, but weren't able to provide us with sufficient evidence to support what they've done on that. So we actually carried out our own exercise to gain that assurance, and arrived at a figure that was less than materiality. So that gave us assurance that there was not a material misstatement in that area. But we have included an additional recommendation in the report that that's an exercise that should be carried out and fully and documented in the future. Okay, moving on to a quick point to highlight on the pension fund net liability on page 9. So that work was also in progress at the time of the last meeting. And we've got one point to highlight there in relation to there's a difference between what's in the actuaries IS 19 report in terms of the pension liability and what's in the council's accounts. And that difference is not material, it's £586,000, but it is above our reporting threshold. And it reflects the difference between the actual cumulative payments and the assumed ones that the actuaries use. But our view, and the council's now in agreement, having looked at it, is that difference cannot actually be estimated with certainty. So that's something that the council's agreed to look at for next year's accounts. So that's actually included as an unadjusted item in Appendix C. Right, just skipping on through. So page 12, I don't think we had an assessment on that one. So now that we've completed the work on land and buildings, due to the issues that we had around the leisure centres leading to a material adjustment, we've assessed that as red there. Okay, so that's the changes directly in relation to the financial statements. The report then goes into the value for money, which is unchanged. There's nothing to highlight to members there. So just jumping through to the appendices in that case then. So page 23 is our action plan. So I mentioned we had the additional recommendation there. So that's the one at the bottom of page 23. So management have agreed that and said that will be addressed for the 2021 audit. So we're happy that actions are in train to address that going forward. Appendix C then, if I could move on to now on page 26. So this is the audit adjustments that have come out of our work. So previously we had the indexation one, the first one there. We've just updated the actual accounting adjustments that have been made for that. And there are two other adjustments highlighted there. One is the other material adjustment in relation to the leisure centre valuations. And the other one is there was an amendment of 250,000 in relation to the valuation of an investment property, where I think it was just a typo. The correct value from the valuation from the investment property certificate wasn't the one that actually got used within the fixed asset register. Over onto page 28, and apologies for not flagging this with Graham earlier. So Graham in his instruction said there'd be no changes required to the letter of representation. And I had forgotten to mention that Appendix C, page 28, is the unadjusted misstatements arising from the account. So these are the two items. First one is the one I mentioned regarding the pension liability amount. And one is an issue we identified in our fixed assets valuation testing. These are below material, and the council has opted not to adjust for them on the basis that they are not material to the accounts. But they are above our triviality reporting threshold, so we do need to bring them to members' attention. And what we will need members to formally consider is whether they are happy that the accounts are not adjusted for these items. So this is very much a standard process. If the amendment is material, we'd normally expect it to be the amendment to be made. If it's not material, it's quite often the case that a council may opt not to make those changes, but it does need the audit committee's agreement for both of those items. So as you can see, that management's reason for not amending is that those items are not material to the accounts, but we will need members to formally consider that, and it will need to be a slight amendment to the letter of representation if members are happy to agree to that.
Councillor Collins would like to speak.
I was going to bring you back to a point earlier in the report, so perhaps if I can leave that until the end of the report, and then come back to that point, if I may, Chairman.
Thank you. Okay. Mark, is that a question on these non-material issues? Presumably they're just carried forward to next year's accounts.
Yes. So both of these items we would expect to be corrected in the 2021 accounts, and indeed we've already had on the first one around the pension liability, we've already had management's confirmation that that is something that will be addressed because we've included it within the action plan. The second item we would expect to be picked up as part of the valuation activity going forward. Yes.
Thank you.
Okay, just a couple points just to finish on. So Appendix D is the fees page. So just to confirm that clearly the audit has gone on for longer than we were anticipating, hence we're having a second meeting now. There's been obviously an impact on the auditor input in terms of the hours worked in relation to that. We're in the process of assessing that at the moment, waiting through our finance system to get updated for the prior week. So we will be liaising with Graham and Peter once we've arrived at a position in terms of the fees, and that obviously will be reported to yourselves as those charged with governance as well, because we'll be looking to report a final position in our annual audit letter. So the annual audit letter would be following within a month of the opinions, that we're aiming to have that out before Christmas. And finally, just so you're aware, on the audit opinion, I mentioned a small change on the emphasis of matter paragraph, and that's highlighted in red on page 30. So that's all I was going to go through on the report, Chairman, but happy to take Councillor Cole's questions and any others.
Okay, thank you, Mark. Perhaps Councillor Cole could.
Yeah, thank you. Yeah, going back to page 8 in the agenda, I think that's the only number I can see. Significant audit risks. Sorry, it's page 8. Yes, page 8. So the one, of course, to do with the Leisure Centre, the main issue. I mean, looking at what's written here, it sounds, in the absence of anything else, that the council's engineer had some concern about something in terms of the value of the valuation of the property, but in the end that wasn't followed through. That wasn't agreed by the audit team. So can you get me some comfort that whatever the concern was from the engineer, council's engineer, that in the end that's understood and there's not something that's been still something technical which is going to catch us in the future?
Yeah, if the officers can talk to the the council's reassurance from the audit side. Yeah, the challenge that we sent back via the valuer to the engineer was, can you explain what led you to change these asset lives? And when they re-looked at it, they were happy that actually when you referenced it back to the property condition survey evidence, that those changes weren't justified, but that a more accurate valuation will be based on the asset lives similar to the ones that we were working on previously.
Okay, but perhaps I could pose a question to the officers then. What was it that the engineer thought was a problem, which turned out not to be a problem?
Well, so Chairman, maybe I can start, and then Peter or Vicky can come in on this one. I understand that the main issue here was around Cranley Leisure Centre. In fact, is that? Can I just see if I get a nod from Mark? was it mainly Cranley that was the issue here? Because I mean, we know the condition of Cranley, and you know, we have investment plans for Cranley, and I think what Nick, our engineer, had done was to look at that. I think, you know, we weren't able to evidence that view from Nick to the extent that you know, Mark's and his team were looking for to substantiate that. So I mean, Peter, Vicky, is there, other than Cranley, was there anything else particularly under this leisure centre point?
No, I think Nick's perspective was that we'd had the plan in place to do the feasibility study on the redevelopment of Cranley, but that was a misinterpretation by Nick on the fact that we weren't actually decommissioning Cranley in 2 years' time. That's not on the cards at the moment. It's still a functioning operational building that we will be maintaining service from for the foreseeable future. So therefore, to say the useful life, and it was 2 years remaining, was actually based on something quite historic that hasn't transpired over the last probably 2 years. In reality, you know, the fact that we won't be redeveloping Cranley immediately, there are plans to do something much bigger in that area, but for the foreseeable future, it will remain an operational asset.
Right. So the valuation has to be independent of any future plan.
Absolutely.
And, yeah.
The council's not made a decision on what it's going to do with Cranley going forward. Therefore, it's still an operational asset. We still deliver service from that. And
presumably, sorry, second point, Chairman, related, all these valuations are as of April or March 2020. So anything that's happened since then is not considered here. It has to be, is that correct? It's at a certain, these things are applied at a certain date, or calculated for a certain date.
Yes, if I can just come in there. So these were, all of the legislations were revalued in the year, and I think I'm correct in saying, I'm looking at Vicky as I say this, they were revalued as at the 31st of March 2020.
Fine.
Yeah, that's correct.
They were.
And I think just in terms of the asset lives, I think Cranley was the main one that stood out, because I think the remaining useful life had been reduced to two years. And clearly, as Peter said and Graham said, we'd have expected there to be plans that very, very well developed plans for what was happening with that in that case. But the remaining useful lives of both Farnham and Hazelmere had been significantly reduced on the prior valuation as well. So it wasn't just related to Cranley.
Okay. So and again, those two were adjusted back up.
Yes, they were. Yes.
I see. And again, is there some assurance that it was there wasn't a technical reason why they'd been reduced, a valid technical reason?
Not I'm aware of. Management. So we obviously had a look at that in quite some detail. And Peter and Vicky and their team looked at that as well, and in conjunction with the last conditions survey, we're happy that the revised figures that you've got before you now are fairly stated in terms of valuations for the leisure centres.
Okay. Thank you, Chairman.
Well, thank you. Can we come back to page 8 and the last bullet point in your red writing on this page? And you mentioned that a member of the finance team on secondment closely involved in the decision-making process of the internal valuer. So there's some sort of conflict of interest perhaps there. I mean, is this something that is just simply a staffing issue going forward?
Sorry, I unmute myself there. So I didn't particularly highlight that because that was something that we had included in the previous report, Chairman. So there was a recommendation in relation to that that's on page 23 of the action plan that is in black. So the second one on the page there, that that set out our comments and recommendation on there, and the management response that was accepted. So I think
that's covered.
Yeah, so that wasn't something that's the reason I hadn't particularly highlighted that one.
Yeah,
It was
okay.
in red because it had been added to that page, but it wasn't an issue that was new.
Thank you. Councillor Gray, have you, your hand is up?
Thank you, Chairman. Just going back to the Cranley issue, you said that it effectively said the useful life was 2 years, and then following your questions, management looked at that. Can you tell me what the current useful life of Cranley was extended to? From 2 to what?
It was extended to 8 years, Councillor Gray.
Okay. There has been quite a lot of depreciation on that particular property in previous years as well. Are you satisfied that the increase to 8 years is justified?
I think it's difficult for me to comment as the auditor. It's certainly consistent with the other information that we've got. It's consistent with the prior year and the last conditions survey. I think it's, I don't know, that's probably one for management to comment in terms of if they are then assured, because it's clearly, as I'm not a valuer, I'm considering the evidence that has been provided for the audit. So perhaps if
before management come back, you also mentioned that Hazelmere, I think, and Godalming had also been reduced. What are the relative periods for Hazelmere and Godalming?
It was actually Farnham that I mentioned.
Sorry.
No, that's fine. So the remaining useful lives for Farnham and Hazelmere are 54 years and 56 years respectively. I think Godalming is one of your newer leisure centres, isn't it?
Okay.
Yeah.
Okay. So if we could go back to management, and that seems to be a very large difference. I mean, 56 years is beyond expectation. It's an awful long time. The world will have changed in 56 years.
Indeed. Chairman, should I start, and then maybe Peter and Vicky might want to chip in? I mean, I think what's happened here, but and this is why we've got some updates in the annual audit letter, is between our last meeting and this meeting, we haven't been able to square up our evidence to the right sort of level behind the figures that we put in, and so we've reached an agreement that some adjustments are needed. Peter and I have taken some learning away for next year, and we'll work with Mark and the team to get that evidence up together. So that's not an answer specifically to your question, Councillor Gray. I think the actual useful lives themselves, are a judgment, and we bring in our engineers team. And apologies if we use the name Nick earlier, just to explain that is our engineer, our in-house engineer, Nick Laker. And a combination of Nick's professional view and our valuations, our qualified valuers view, we arrive at some book values to put in here. So Mark and the team have sort of called us on our evidence there and found some gaps, and hence these comments. I think will these leisure centres last for those precise amounts of time? I mean, no, I don't think anyone can say. I think at the best information we have at a point in time, we try and use. I think, as I say, we will be revisiting the way in which we look at our stock condition survey and square that up with our estimates, and then prepare the rationale behind the figures that we put in there. But it is, I'm not a valuer, and actually Nick's not a property valuer, but he is an engineer, and he can look at a building and make an assessment. So from management's point of view, Councillor Gray, I think I'm happy that we proceed on this basis, and we take stock after this and look at how we can sort of better evidence that. But I couldn't sit here and tell you that any of our useful lives behind asset valuations are are going to work out exactly as we've put into the figures. I mean, I don't know, Peter, Vicky, is there anything you wanted to add to that in terms of our useful life estimation?
The difference occurred this year when our asset manager, so our valuation officer, valued the leisure centres, and historically, each of the leisure centres had a slightly different initial asset life, and they had a different set of calculations for DRC. They weren't hugely different, but there were some different assumptions in there. And with our valuer being new to us this year, she took a different view, having considered the matter with the engineer, and standardised the calculations to deliver some book values. And that was based on inputs that we weren't able to substantiate through the engineer other than an opinion. Because of the increased audit requirements from Grant Thornton this year, we weren't able to go back on that and say why those were the asset lives that were acceptable in prior years and in prior year audits, but weren't acceptable this time round. So therefore, the sensible approach was to go back to what we did have from an audited position, which would be asset lives in the prior year. But we also have the 2017 condition survey that talks about the maintenance lives of the components of those individual assets, the 4 leisure centres. And that enabled us to get a good insight into the economic life of the whole of each of the assets in terms of the combination of all the components. So, for instance, the infrastructure, the main structures of the leisure centres had asset lives between 30 and 40 years for maintenance purposes before significant work was required. And then smaller elements of plant had different maintenance lives. But the 2017 condition survey showed that there was, in total, over the next 10 years, a requirement of about £3.5 million worth of expenditure required in maintenance. And that's including Cranley, considering that we are looking at Cranley in the whole to re-provision, purely because of its age as a leisure centre, and also because as a operational asset, we just need so much more from our assets today, other than it just being a leisure centre, that there's more that we can do with the land value and the asset. And hence why the conversation's been rumbling on for a few years now around what can we do with Cranley going forward. And that's something that the council hasn't made a decision on at this point in time, and that's why Cranley will carry on as an operational asset until such time that a decision is made of what to do with it. And that's literally the situation with the discrepancy that came up with the asset lives. Hopefully it's helpful.
Yeah, I have 2 follow-up questions, if I can, Mr. Chairman. I mean, I've been around for 4 or 5 years. We've had issues around leisure centres, but nothing like this. 1, why has this come up? And 2, are we not concerned? We've got Cranley with a life of 6 years, and our Farnham and Hazelmere things with 54 and 56 years. That's a very large discrepancy, and I just quite can't understand how we've suddenly come across this problem this year that's caused you. And when you're answering that, if you could turn around and say, well, you imply that your valuers made some decisions and no one knew about it until the auditors came across it and then gave you a problem. Why are there not management processes which pick up change, which pick up variations, so that you as management are reviewing that before you actually go into the audit position?
Chairman, I'm just looking for the point now in the audit findings report, but in the report that the committee considered in September, so one of the elements that hasn't changed is in the action plan. I'm just looking for it now, where here we are. I think Peter and I have talked about sort of oversight and sort of oversight of the valuation process. Here we are. So it's on page 23. Management assurances on the valuation, and the management response that we gave last time that I stand by is that the recommendation accepted in this aspect will be reviewed in the autumn in the light of new roles and structure. Strengthened oversight will be included in the close down plan next year. And that Councillor Gray, is what we've accepted we need to do, and we will do. And that is, I think, what you're talking about in terms of a process to, check in on the, if you like, the sort of rule of thumb check of some of the figures that are coming through. So we've recognised that, and we will address that.
Thank you, Graham. Are there any more questions on this agenda item? Okay, thank you. Can we move on to agenda item 2 then, which is to consider the changes to the 2019-20 accounts? Now, we've gone through a fair bit of this. How do you want to handle this, Mark?
Chairman, it's probably more for me actually, and Peter than Mark. I think
Okay.
I think Grant Thornton have set out the revised audit findings report. Now, whilst we haven't put on the agenda, Chairman, I was going to suggest that firstly you sort of receive the updated external audit findings report. I think that's what you would normally do. I think receive is what the committee do. Unless Mark or John say anything to the contrary. That's what I was going to suggest you do for that last item and agree that. Mark, are you happy with that?
No, we fulfil the reporting responsibilities are under auditing standards for ourselves to make very clear to yourselves as those charged with governance the outcomes of the audit, which we've done by discharging the last item. And then so the accounts, I think we are happy that the amendments that we've talked through in our AFR have been processed in the accounts themselves.
Yes, I think the only thing to add to that is just the unadjusted misstatements. So I think just members need to consider if they're happy that those remain unadjusted, and formally record that, because that will be added to the letter of representation.
So Chairman, I've got in the light of that on the item, the accounts item. So just because we've moved on from the item, sorry, let me find the agenda. What item was the what item? So the annual audit letter item. Sorry, the audit findings. That was item 6.
Yeah.
So I think in terms of the minute for that item, I think you receive the updated audit findings report, and then getting on to the 1920 accounts. I think what the committee need to consider is to approve the statement of accounts for the year ending 31st of March 2020 as amended, because you approved it in September with a delegation. We're back now, not exercising under the delegation, but under formal committee. So it's to formally minute the committee's approval of the statement of accounts for the year ending 31st of March 2020 as amended. And then we need to, as Mark said, agree an amendment to the letter of representation to reflect the unadjusted misstatements set out in the audit findings report. So that's what I was going to propose as a resolution from the committee on item 7, Chairman.
Okay.
Mr. Chairman, can I raise a point on that?
Please do, Councillor Graham.
Thank you. I mean, we go back to John and Mark's presentation. They've shown us all their issues. They've also raised the issue that they've identified, because it's above the reporting threshold, they've identified issues that Waverley has decided they're not going to change. To me, we need 2 things out of this part on the item. We need to agree that we've received the audit findings, and 2, we need to agree that we're not going to make the adjustment. That then would flow through to the accounts, which would then flow through to the letter of representation. Personally, I think we should agree the question that we're not going to adjust the accounts under the audit heading. That's just my opinion. I don't know whether anybody wants to comment on it, but that would make me feel happier.
I'd be happy with that, Graham. Do you think that would be something we should do?
Yeah, I think as long as we cover that item off, Chairman, I think it's a matter of the committee to be happy with the way that that's sort of worked into the resolution of the committee. So as long as we approve the statement of accounts as amended, and either by noting the adjusted letter of rep and or by accepting the unadjusted misstatements, then I think you've covered it all there. I think if councillors are happier doing it specifically like that and separating the agreement of the unadjusted misstatements, and separately agree a letter of rep as amended to reflect the unadjusted misstatements, that's fine by me.
Okay, can we go through these one by one then? Ask for the committee's agreement. So the first one then is to agree the is it the, what would you say, the updated statement, updated audit findings report?
Yeah, I think you received that, Chairman, because I don't think you agree that.
To agree to receive the updated findings report, yeah.
Yeah. Yeah.
Agreed.
Agreed.
Yeah.
Thank you. And then also to agree not to make any adjustment to the misstatements.
Agreed.
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 Thank you. And also to say we agree that the letter of representation doesn't need any changes except some minor, there's the date update on that letter. Agreed.
And Chairman, to reflect the unadjusted misstatements.
Unadjusted numbers.
And yes, agreed. Do we agree to that?
Yeah, agreed.
Agreed.
Thank you very much.
Sorry, Mr. Chairman, you're confusing me a little bit. Don't we have to agree the accounts first and then the letter of representation? I think that's what Graham said. He wants us to accept.
Do that first, yes.
With the changes that are in on page, I think it's 141 in our papers.
Yes, Chairman. So the committee will need to approve the amended statement of accounts for the year ending 31st of March 2020.
Yes.
And that, I mean, you can say as set out in the report if you want to specifically refer to them, but they are here on the agenda.
Yes. Okay. Let's take that then. The committee agrees to accept the 2019-20 statement of accounts as presented by Grant Thornton. Do we agree?
Well, we're presenting the accounts, Chairman. So
again, sorry, Graham.
Yeah. So it's well, I mean, Waverley are presenting the accounts. I think it's just to approve the statement of accounts, the amended statement of accounts for the year ending 31st of March 2020. And apologies, we didn't draft all these in advance of the meeting, Chairman.
No. Okay, so we agreed to the change of the account of the 2019-2020 accounts.
Agreed, Chairman.
Agreed.
Graham, do we need to do anything now more with that agenda item? Do we need to go through the accounts at all?
No, Chairman. I think because all of the changes that have been highlighted in Grant Thornton's report have been incorporated into the accounts, and no other changes are in there. You have just agreed those amended accounts, and you've had all of those items sort of itemised in the Grant Thornton report. So I think you're there now, Chairman. You've received the updated annual external audit findings and agreed the accounts and the other adjustments that you need to make as well.
In that case, I think the meeting is concluded. Yes? thank you all very much for attending, and particularly John and Mark from Grant Thornton for their time. Thank you very much.
Thank you, colleagues.
Thank you very much.
Thank you, Chairman.
Thanks.